Hello, everyone out there in YouTube land. Jeremy Hritz here, episode number 30 of the Traders Podcast. So grateful to be back here with you today, where we're going to talk about what's happening in the markets, the current state of the markets. I've been away for a little bit of a time, and in between then and now, we had a flash crash. We got bought back up, and today, I just happened to be doing this podcast when Jerome Powell spoke at Jackson Hole. And I'm going to talk about recession, what a recession means, where we currently are in the markets, how a recession can impact the market, where are we going from here with rate cuts imminent. So there's so much to cover in today's Traders Podcast, episode 30. Let's go. All right, so we have to start each show with Ask a Trader, and that's what we're going to do here today. I have the questions here for this episode, and the first one is, where the hell have you been? Well, if you checked out my Facebook posts, I talked about how I've been with my family, and so one of the benefits of what I do, I have complete freedom. My kids are off from school in the summertime, and so it's all about the family. So I disconnect, got away from YouTube, got away from Facebook, and just was present with my family. Obviously was trading, but just took a break. And now with the kids going back to school, you're going to see more and more of my ugly mug as we start to ramp back up. But that's where I was. So family's number one. Wanted to get as much time in with them as I could. And that's what I did. And now I'm back. Lots of things coming. I'm going to have a free beginners boot camp, 2 different times, 12 to 2 p.m. Eastern and 7:30 to 9:30 p.m. Eastern. That's going to be on September 10th. If you want to learn how to trade the markets, or if you know somebody who wants to learn, have them sign up for that. You can find that on my Facebook. I'll link it in the show notes. And I have a back trading class I'm going to be offering for those who are currently trading, to walk you through a protocol that you can follow to build your skill for day trading. So that's going to be coming up soon. And then I'm going to have a mentorship that's going to run from the end of September all the way into December. For those of you who want to become profitable traders, I'll walk you through everything that you need to do that. So those courses are coming, so be sure to check that out. So that's where I've been. The next question is, NVIDIA earnings is coming again. What are your thoughts? So stay tuned for my NVIDIA earnings video that will be out on Monday. So I'm not going to share that with you today, but NVIDIA does report on the 28th of August. I'll let you know what I think is going to happen in that video. So check that one out. And then finally, this question asks about economic data, and why is economic data so important in terms of big market moves? Well, if you're part of the Courage Pays Better Than Fear community, you always see me writing about or talking about inflation data, manufacturing data, jobs data, Fed speakers. All those things are important because they give information to market makers, big institutional traders, investors, as to whether or not they're going to buy and sell. And you could see very clearly, just like today when Jerome Powell spoke at Jackson Hole, when he was speaking, his words had a strong impact on the market, and today just happened to be bullish. Rewind 2 years ago when he spoke in Jackson Hole, when inflation was up and they were raising interest rates, he talked about how there was going to have to be some pain inflicted on households because of the economy, and you saw a corresponding drop. So the news, Fed speakers, those things impact the markets because they offer information and insight into where the economy is, how the market should be performing, whether or not people should buy or sell. And that's why it's so important. So that's Ask a Trader. And now let's get into talking about the current state of the markets. Are we in a recession? What's going to happen next? How am I approaching this? I'm going to cover all that and more here right now. Let's go. So while I was gone, there was a massive, I wouldn't call it massive, probably about 9%, almost 10% down on the SPX. We didn't hit 10%, and almost 16% on the QQQ. And there was a huge drawdown on a Monday. I think it was August 8th. Some people were referring to it as Black Monday because there was a huge drop, and everybody was panicking. Oh, it's the start of a bear market. We're going to zero, yada, yada, yada. But that didn't happen. And this was all precipitated following Jerome Powell's press conference when they announced that they would hold the rate steady in July. The markets rallied up, but then sold off very hard. And people started to get concerned about unemployment. The unemployment number ticked up. We started seeing jobless claims tick up, and people started worrying about the real threat of a recession. And that's what really caused panic in that sell-off. And there's also some people talk about the potential of the Japan carry trade, which is where people would borrow money in yen, which had negative interest rates, and they would use that money to invest in U.S. equities, U.S. stocks. And around that time, Japan had announced they were going to increase interest rates. And so a lot of people were saying there was a global margin call, specifically one gentleman, Michael Gayed, who talked about this carry trade and that caused this massive sell-off. And so what happened after that is Japan said, okay, we're not going to mess with rates. And you saw this recovery occur in the market. And so let's just talk about what is a recession. Well, a recession is marked by economic decline. It just made some notes here. There are different indicators, triggers that tell whether or not empirically, based on evidence and numbers, if we're in a recession or not. But typically, we see a decrease in GDP for 2 consecutive quarters. So that's one metric that people look at. Another one is whether or not the SOM rule is triggered. And that was triggered here a few weeks ago. And historically, that's been 100% accurate that whenever that's triggered, we are in a recession. Now, are we in a recession? We don't know. The actual creator of the SOM rule said that we did trigger, but it doesn't necessarily mean we're in a recession, which was kind of interesting. You have to wonder if there was some influence politically on that. But other components of a recession, you see the economy slow, lower consumer spending, which right now with inflation still being, sticky, not as high as it was, we are seeing the consumer hampered by interest rates. We're not seeing a lot of people buy homes right now because the interest rates are so high. Now that we see that they're going to start coming down, we're going to get our first cut in September. We'll probably see that improve a bit. But what you also see in a recession, you see higher unemployment rates, hence why that sell-off came in, because people were panicking like, oh my gosh, the unemployment rate is so high. But then you also see a decline in business investments and profits. Right. So think about earnings reports that companies make in terms of, their quarters, how they perform, what they've generated. What you'll see is that businesses are reporting losses or they're not meeting the targets established by Wall Street. And whenever you see that, that can be an indicator of a recession. Now, when you look at earnings, the majority of businesses that have been reporting have been beating and meeting expectations. So that's a good thing. So we're not checking that box for a recession. Potentially that can come later on down the road. Are we seeing higher unemployment? We're starting to see that tick up, but it's not out of control. It's kind of in balance. Are we seeing lower consumer spending? Yeah, we've been seeing that for quite some time with rates as high as they were. Are we seeing slowing in the economy? Can we look at GDP and see contraction? No, we're not seeing that. We're seeing some expansion. Now, there is other data out there related to manufacturing that is showing contraction in the economy, which means there's not as much production that's occurring. So really right now there's a mixed bag of data. Some indicates that we are in a recession or are heading towards a recession. Some data indicates otherwise. And it's really difficult to tell whether or not you are actually in a recession until the recession is over or before it's too late. So we can theorize and think about where we are all we want, but we won't know until there's a, oh, you know what moment. So, we can't sit here. We could sit here and say, hey, the sum rules triggered. We're in a recession, but until we see more data or more impact, we can't really say for certain. So what does this mean for all of us as traders and investors and our portfolios and what we're going to do? Well, that's going to be different for everyone. So I'm primarily a day trader, right? So when I'm trading, I'm in and out of my trades within a day. If it's a swing trade, obviously I'm in it for a period of time. But in terms of my long-term investments, if you look at the charts and you go back and look at the drop that we had a few weeks ago, it was just a typical correction, right? We didn't even hit 10% on the SPX. Now, we did go over that on the Qs, right? We almost hit 16%. And so I look at that as just a natural correction that is needed and is actually healthy in a bull market. And do I think this bull cycle is done and that we're going into a recession and we're going into a bear market? No, I don't think that that's happening. However, I think that there is a very real chance that we do get some significant selling and a pullback and a resting period at lows for a period of time because we have been pushing higher pretty significantly. And today at Jackson Hole, Jerome Powell talked about how the rate cut cycle is going to start in September and is going to proceed from there. And typically what you see leading up to that rate cut, you'll see equities move higher. But when the actual cut happens, you will start to see a decrease in the value of stocks. Okay. So the way that I'm looking at this is I am trying to position myself where I'm moving into as much cash as possible, closing most of my positions before the election, because I think that that will be a catalyst that could send us to lows. And I don't think it's going to be permanent. But the reason why I want to be in cash is not because it's the end of the world, but because we are in a bull cycle. But I think there's going to be greater opportunities at that point when things do come down and correct even further. And so that's what I'm waiting for. We're at all-time highs. We're pushing up, and that's just being prudent. And with the uncertainty that's out there, with the items that we talked about in relation to recession, it's just being prudent, smart, wise in terms of how we're going to manage things in terms of our risk. And so that's how I'm going to approach it, right? Can I say whether or not we're in a recession? No, I can't. Can I say whether or not that the rate cuts are going to negatively impact the market? No, I can't. But what I can control is how my investments are working for me, how I'm exiting certain positions, how I'm protecting myself with hedges, whether I'm using options or moving into bonds. So there's a lot of different ways that we could do it. But one thing's for certain is we will see an impact from the actual rate cut that will take place on September 18th. That's when it will be announced. We'll see a move. And typically, if you go historically back and look at the charts, you'll see that when that cut is made, stocks drop. So before the 18th, I'm going to try to be in as much cash as possible. And then, like I said, before the election, trying to be probably 80% in cash at that point and be ready for what comes. Now, can we rally and continue to go to the moon? Absolutely. Right. But this is just my position and how I'm going to approach it. Okay. But I will say this overall, we are in a bull cycle with the fourth industrial revolution as a result of artificial intelligence. And so I think there are bright years ahead in the markets, and it's all about being ready when those opportunities present themselves. And just think, a few weeks ago, we had that flash crash where we dropped. If you would have bought at that low, take NVIDIA, for example, it went down to 90 and it got up to a high of 131 pre-market yesterday, actually. And so that's a $41 move. And it goes along with what Warren Buffett says, and that is be fearful when others are greedy and be greedy when others are fearful. So it's kind of the reverse psychology. And so that's why I want to position myself in cash so that when everybody is crying that the sky is falling, I'm ready to capitalize on that opportunity. So hopefully you got something out of that, just talking about the markets, what's happening, and guess what time it is now. And oh my, what a day. This is a special day. We're going to look at Mr. Roku. Let's check him out. All right, so here's Mr. Roku, and look at this. We finally broke above the 100 SMA on the weekly. Go get it, big man. Look at this guy. Hit $70, $70+ here today, 70.51. And we took out this resistance. Last night, I actually had a coaching session with my good friend Mark through Mountain, Montana. And I was saying, hey, Roku's eventually going to have its day. And I was pointing out how every time it would hit this resistance area, it would get rejected by the bears. And what did it do today? Man, it just pushed, and it's still pushing. So this could be the move that we've been waiting for here. And like we've talked about in the past, when Roku gets moving, it could go, right? So it's here, baby. And the first thing that we're looking for is closing this gap here up to $71. It might do that before the end of the day. It got awfully close here. And then from there, we've got this bear candle we'll have to take out. And then that gap down from earnings that was February 15th will take us back up to 90.63. And so it's not going to be a straight shot there. There's going to be some bumps along the way, but this is a really strong candle. This will be the highest close for Roku since, I mean, what are we at here? 69.19 right now. Yeah, you'd have to go back February, right? So great day for Roku out there. So proud of the little engine that could. And I'm a fan of this company. I actually just bought a new Roku TV for our living room. So our whole household is Roku TVs. I support this company, love what they do. And so what a day to celebrate. Look at this. Look at this volume that's coming in here. Let's go, baby. Roku. That's what I'm talking about. Anyway, ladies and gentlemen, that's going to do it for episode number 30 of the Traders Podcast. Back in the swing of things here. Jeremy Hritz, your grateful host. Let me take these analysis glasses off, and I will see you back here for episode 31. Don't forget about that Beginner Trading Bootcamp coming up on September 10th. Let your peeps know about that, people who want to get into trading. If you're interested in that back trading academy that's coming up, let me know. CouragePaysBetter@gmail.com. Hit me up on Facebook. And I will see you here next week to talk to you about, who knows? I don't know. Let me know. What do you want to talk about? Let me know in the comments. Next week is your show. You tell me what you want to show, and I'll make it. First person to comment, say, here's what I want covered. The whole episode is devoted to you. So let me know in the comments. It's your episode next week. Have a great weekend. Love you guys. Take care.